Hello.
Hello, sir.
Yeah, Nikhil, are you able to see the screen? Highlights of Union Budget.
Yes, sir, it is visible.
Yeah, please read.
Highlights of Union Budget 2024-2025. Union Finance Minister on 23rd July 2024 tabled the Union Budget 2024 to 2025. As mentioned in the interim budget, the focus is on four major states, namely Garib, Mahilaएं, Yuva, and Annadata. The highlights of budget are for the year 2024-2025, the total receipts other than borrowing and total expenditure are estimated at 32 lakh crore and 48.21 lakh crore respectively. The government has made provision of 1.52 lakh crore for agriculture and allied sector this year. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming supported by certification and branding. Prime Minister's package of five schemes and initiative for employment, skilling, and other opportunities for 4.1 crore youth over 5 year period. 1 month salary of up to 15,000 to be provided in three installments of first time employees as registered in EPFO. Incentive to be provided at specified scale directly both employees and employers with respect to their EPFO contribution in first 4 year of employment. Government to reimburse up to 3,000 per month for 2 years towards EPFO contribution of employers for each additional employer for helping the youth who have not been eligible for any benefit under government schemes and policies. The finance minister announced a financial support for loan up to 10 lakh for higher education in domestic institutions. E-vouchers for the purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. The model skill loan scheme will be revised to facilitate loan up to 7.5 lakh with guarantee from government promoted fund, which is expected to help 25,000 students every year. Government will formulate a plan Purvodya for all around development of eastern region of country covering Bihar, Jharkhand, West Bengal, Odisha, Andhra Pradesh, industrial node at Gaya to be developed along the Maharashtra, Amritsar, Kolkata industrial corridor, power project including new 2,400 megawatt power plant at Pimpli to be taken up at a cost of 21,400 crore. Andhra Pradesh Reorganization Act special financial support through multilateral development agencies of 15,000 crore in the current financial year. The limit of Mudra loan will be enhanced to 20 lakh from the current 10 lakh for those entrepreneurs who have availed the successful repaid previous loan under Tarun category. Turnover threshold for buyers for mandatory onboarding on the TREDS platform to be reduced from 500 crore to 250 crore. New schemes to support the development of 100 weekly hubs or street food hubs every year for next 5 years in select cities. Under PM Awas Yojana Urban 2.0, housing needs of 1 crore urban poor and middle class families will be addressed with the investment of 10 lakh crore. This will include the central assistance of 2.2 lakh crore in next 5 years. Government will endeavor to maintain strong fiscal support for infrastructure over next 5 years in conjunction with imperatives of other priorities and fiscal consolidation of rupees 11 lakh 11,111 crore for capital expenditure has been allocated this year, which is 3.4% of our GDP. Government will operationalize the Anushasana Anusandhan National Research Fund for basic research and prototype development and set up mechanism for spurring private sector driven research and innovation of commercial scale with a financial pool of 1 lakh crore in line with the announcement in interim budget. Direct taxes. Standard deduction of salaried employees increased from 50,000 to 75,000 for those opting for new regime. Similarly, deduction on family pension for pensioner enhanced from 15,000 to 25,000 rupees. Assessment now can be reported beyond 3 years up to 5 years from each year of assessment, only if the escaped income is more than 50 lakh. The new tax regime rate structure is also revised to give salaried employees benefit up to 17,500 in income tax. And the tax slab under the new tax regime are as follows. So from 0 to 3 lakh rupees, there will be zero tax rate. And from 3 to 7 lakh rupees, individual will have to pay 5% tax. Then between 7 to 10 lakh, tax rate will be 10%. And between 10 to 12%, 12 lakh rupees, tax rate will be 15%. And from 12 to 15 lakh rupees, tax rate will be 20%. And after that, 30% will be taxable above 15 lakh. Corporate tax rate on foreign companies reduced from 40 to 35% to attract foreign capital. Budget further simplify the direct tax regime for charities, PDS rate structures, and capital gain taxation. The two tax exemption regime for charities will be merged into one. 5% TDS on money payments will be merged into 2% TDS and 20% TDS on repurchase of unit by mutual fund or UTI stamps withdrawal. TDS rate on e-commerce operator reduced from 1% to 0.1%. Now credit of tax collected at source will be given on tax deducted at source, deducted from salary. Budget decriminalize delay for payout of TDS up to due date of filing of TDS statement. On capital gain, short-term gain shall henceforth attract the rate of 20% on certain financial assets. Long-term gain on long-term gains on all financial and non-financial assets attract 12.5% rate. Limit of exemption of capital gain has been increased to 1.25 lakh per use. Indirect tax. There will be a reduction of basic custom duty on X-ray machine tubes and flat panel detectors, BCD on provide phones, printed circuit board assemblies, and mobile chargers reduced to 15%. Budget will foster competitiveness in Indian leather and textile articles of export. BCD reduced from 7.5% to 5% in methylene difluorosilane isocyanide used for manufacture of spandex yarn. Custom duty on gold and silver reduced to 6% and on platinum to 6.4%. BCD on ferro, nickel, and blister copper removed, while BCD on ammonium nitrate increased from 7.5 to 10% to support existing and new capacities in pipeline. Similarly, BCD on PVC tax banner increased from 10 to 15%, considering the hazards of environment.
10 to
10 to
25%.
25%. Sorry. The monetary limit of filing appeals related to direct tax, excise and services tax in High Count, High Court, Supreme Court, and tribunals has been increased to 60 lakh, 2 crore, and 5 crore respectively.
Fiscal target.
Okay. Fiscal target buyer's market, tax on capital gain, and dampeners. The hike in capital gain tax and containment of fiscal deficit to 4.9% are the big banner headlines of the sixth full budget of finance, Minister Nirmala Sitharaman, and the first budget of Modi 3.0. At the end of the day, the market appears to have taken the increased tax rate in their stride. with the Nifty closing down 30 points and Sensex 73 points. So there were wild intraday swings. At one stage, the Nifty was down nearly 500 points. In bull market, investors tend to shrug off worries, though the long-term impact remains unclear. Indian competes with countries such as Hong Kong, Singapore that have lower capital gain tax. Whatever the logic, the government has clearly ignored a vocal lobby of traders and investors, foreign and domestic, who were opposed to idea of higher capital gain tax. Capital gain tax divides market. STT hike on future and option trade unlikely to deter retail traders. The increase in capital gain tax, both long-term and short-term, came as a nasty surprise for market, as if to rub it in. The budget also proposed a hike in securities transaction tax on derivative trades. The latter, though, does not pose a big risk to sentiment as the hike in capital gain tax. Following the announcement, Nifty fell by 400 points and Bank Nifty by 800 points, but both indices recovered soon, ending 0.12% and 0.92% lower respectively. Technical analysts believe that Nifty can even retest 24,000 level with its resistance level at 24,700 to 24,800. Banking and finance. Budget 2024 government reiterate rupee internationalization internationalization commitment, but not so easy, say bankers. India's Finance Minister Nirmala Sitharaman has emphasized the government intention to promote rupee as an international currency. She announced plan to simplify rules and regulation to encourage foreign direct investment and overseas investment in India. The Reserve Bank of India has been working on international banking the rupee for year, allowing person resident outside India to open rupee account outside country, allow bank lending to person resident outside India, and facilitate FDI and FPI investment through special non-resident rupee and Vostro account. Internationalization of rupee has been on the government's and Reserve Bank of India agenda for many years. This year, it is in its annual report released in May. RBI said, say to as part of its endeavor to internationalize the currency, it will let person resident outside India to open rupee account outside the country, allow bank lending to PROIs, and also foreign direct investment and foreign portfolio investor investment through special non-resident rupee and Bostro account. However, making rupee an international currency is easier said than done. Bankers say that global currencies like dollar are very liquid and countries like US still control vast amount of global trade. As per Economics Times, Paytm partnered with Axis Bank to offer point of selling solution card payment devices. Fintech firm 197 Communication, Paytm's parent company, has teamed up with Axis Bank to provide point of sale solution and card payment machine to banks and merchants. Paytm EDC device offers store management services like inventory management and CRM. The partnership aimed to enhance transaction efficiency, store management, and customer engagement, benefiting both companies. Axis Bank sees this collaboration as a way to expand their merchant acquiring portfolio and offer more payment solutions. Indian Bank's short-term debt rises to 12-year high on loan demand. Indian banks are increasingly resorting to short-term borrowing, utilizing certificates of deposit to bridge funding gap driven by strong loan growth and slower deposit accumulation. As a result, the outstanding amount of these certificates surged to 4.3 trillion rupees, somewhere about 55.4 billion in the fortnight through July 12. This marks the highest level since June 2012. Business and industry. BSNL gets major share of telecom budget at rupees 82,916 crore. Union Finance Minister Nirmala Sitharaman has proposed an allocation of 1.2 lakh crore for telecom project and public sector firm under Telecom Ministry, with most of the fund designed for state-owned BSNL according to budget 2024 to 2025 document. Out of the total proposed allocation, over 1 lakh crore is intended for BSNL and MTNL related expenses. This includes 82,916 crore for technology upgrades and restructuring at BSNL. Additionally, in Union Budget 2024, government has proposed 17,510 crore for pensionary benefit of Department of Telecommunication employees, including those absorbed in BSNL and MTNL from April 1st, 2040. Gold, silver gain shine ahead of festivals. Gold has become cheaper by rupees 5,900 per 10 gram and silver by 7,600 per kg after Finance Minister Nirmala Sitharaman decision to more than halve import duty on precious metal to 6% from 15% in the budget. The duty reduction offer relief to customers ahead of busy festive season when there is a traditional spurt in gold purchase. India import almost all gold it needs for making jewelry. Gold demand fell 15% in the June quarter due to needs for making jewelry. Gold demand, sorry, gold demand fell 15% in June quarter due to high price. On Tuesday, gold and silver prices were 72,609 per 10 gram and 87,576 per kg respectively. Production linked incentive for toys, leather, footwear gets nod, rupees 6,000 outlay seen for scheme till financial year 32. Government will introduce the production linked incentive scheme for the toys and leather footwear sector with a total outlay of over 6,000 crore according to the budget documents. Both schemes are set to run until 2031 and 32. The PLI for toys will have an outlay of rupees 3,489 crore, while the footwear and leather sector will receive rupees 2,600 crore. These schemes are pending cabinet approval with a token allocation provided for this year. Currently, PLI schemes for 14 sectors with an outlay of rupees 1.97 trillion are operational. Adding to the new sector will increase the allocation for the scheme launched in 2020. Of the total allocation, only 5% of the funds have been disbursed as incentive to beneficiaries. The financial year incentive outgo is expected to reach rupees 14,182 crore, up from rupees 8,000 crore in financial year 24. In financial year 23, the incentive payout under scheme was rupees 2,900 crore.
Very good. 1 minute. Hold on. How many pages are there still? Oh, Baba. This much. We will go to this one. Straight away read this. Repo rate.
Okay. So as of now, repo rate is 6.54% and SDF is 6.25%. Marginal standing facility bank rate is 6.75%. Cash reserve ratio is 4.5%, and statutory liquid ratio is 18%. So
US.
if I talk about foreign,
I will read the balance. US dollar is 83.66. Great British pound. Pound sterling is 108.07. Euro is 91.05. 100 Japanese yen is equal to 53.45. BSC Sensex is 80,429. It has come down by 73 points. Nifty is 24,479, come down by 30 points. Bank Nifty is 51,778, has come down by 502 points. Other headlines are Finance Minister checkmates F&O surge with STT, then long-term capital gains tax benefit taken away for shares sold in a buyback offer, sale value to be taxed like dividend income. Now pay more tax on older property sale as FM removes indexation. That's all. These are the headlines. Thank you so much, Mr. Nikhil Kumar. Thanks for reading. I wish you the best of luck. Thank you.
You're welcome, Sumit.